showing signs the economy road to recovery, with unemployment claims starting to slide back from recent highs, way up. But Fed Chair Jerome Powell could be a long road in urging Congress to pass a new round of stimulus. Joining us now is the Republican Senator Pat Toomey of Pennsylvania. He also sits on the Senate Banking Committee and is a member of President Trump's reopening task force. We're also joined by our Fed correspondent, Brian Cheung. Good morning, Senator, and thanks for being with us. There's lots to get here to this morning with you, but I want to begin with some breaking news we got this morning regarding the Supreme Court ruling against President Trump in a set of cases over his effort to end the Obama-era immigration program known as DACA. The Chief Justice Roberts here reasoning that the Trump administration's termination of the program was, quote, arbitrary and capricious in violation of federal law. What is your response to that?
Yeah, well, my response is I've not had a chance to look at the decision, and that's what I'm going to have to do. I mean, I think a lot of this from the previous administration exceeded the presidential authority. There was no legislation from Congress to do this. So it's hard for me to understand why that which the previous administration can do can't be undone by this administration. But I'll have to read the decision to have a better understanding of the rationale.
Senator Toomey, Brian Cheung here. I cover the Federal Reserve for Yahoo Finance, and I was dialed into the Senate testimony from Jerome Powell 2 days ago. I was curious about your exchange with the chairman with regards to the corporate bond purchases. Right. Chairman Powell telling you that he doesn't want the Federal Reserve to, quote, run through the bond market like an elephant, end quote. Right. Do you see that as being the case for the Federal Reserve? They've only had about $5.5 billion of those bond ETFs, but it seems like there has been some concern over what the effect of their direct bond purchases might be as they embark on that this week.
Yeah, here's my concern. The purpose for setting up a secondary bond program is one of twofold, right? It is either to ensure that the market is functioning smoothly, or it is to provide liquidity to a specific company that's fundamentally solvent but facing a liquidity crunch because of the circumstances we're in. Those are really the only two reasons that we set up the legislation that we authorize this kind of activity. Well, if you look at what's happening in the bond market, clearly the market is functioning. In fact, it's functioning at a record pace, an all-time record pace. We're likely, in fact, I think year to date, we probably are at an all-time record high in terms of issuance for this point in the year. Spreads have come in. There's tremendous liquidity. Companies can access the capital. So there's clearly not an issue of the functioning of the market, and that's great news. And it's also the case that if the intent of the Fed is to buy bonds very, very broadly, then obviously that's not meant to be providing liquidity for an individual company. So my question to the chairman is, why do you need to even continue down this road? Why do you need to set up your own index? I know they had been buying, as you point out, modest amounts in various corporate bond ETFs, but it's not clear to me that this activity needs to continue at all at this point. I think it's good that we have the facility. It should be there, but really standing up the facility itself achieved the goal of unfreezing the market so that private capital is flowing. And so that was a point that I wanted to make.
Senator Toomey, as a follow-up, the reason why people might want to care about what your opinion is because you're on that Congressional Oversight Commission, right, along with some other folks that determines or I guess kind of evaluates the Federal Reserve's use of the $454 billion that you appropriated to the U.S. Treasury and to the Fed as part of the CARES Act. The Fed's burned through about half of that so far. If you could give I guess, a scorecard right now, a grade, if you will, for the Federal Reserve's performance, whether or not they've been following the statute, what they've been doing so far with the money. What would you give them? And then secondly, what would you like to see the Federal Reserve do with the rest of the money that it has not used yet?
Yeah, well, I would give generally very good marks. I mean, I've always been of the view that the best possible outcome is that the passage of the legislation and the standing up of these facilities would itself unfreeze the private capital markets. Capital would flow. Companies could access the liquidity they need from banks or from corporate issuances, and taxpayers would never have to actually take the credit risk of these borrowers. So to a very significant degree, that's exactly what's been happening. That's a victory. If the Fed never has to go out and buy a whole lot of bonds on the secondary market, whether it's through ETFs or in the creation of its own index, that's a victory. It will be interesting to see what the take-up is on the Main Street lending program, which is a different program, as you know, and one that's just recently become available. But again, we shouldn't automatically assume if the take-up is low that that's a failure, because it could be that the take-up is low because borrowers are able to go and draw down on bank lines and get the liquidity they need through private sources, in part because of the confidence that there is this backstop. So, so far, the most important thing is the flow of capital, and that's working. So, I'm going to have a lot of ongoing questions. I think we need to follow very carefully what the Fed and Treasury are doing. But I think so far they have complied with the law. And I think so far it looks like it's been successful.
Senator, I did want to switch gears a bit. I'm sure you've seen some of the revelations coming out from John Bolton, former National Security Advisor to President Trump, his new book. Chief among them, how he handled trade negotiations with China's President Xi. Have you lost confidence in the president's ability to just negotiate and handle dealing with international trade?
Look, I wouldn't base my confidence on the president's negotiations on one account from one person, which has already been categorically refuted by another person in the room. As you may be aware, Bob Lighthizer, the U.S. Trade Representative, was testifying before the Senate Finance Committee yesterday. I'm on that committee, and he was asked, were you in the room at the time that this conversation supposedly took place? And Bob Lighthizer very adamantly insisted that he was in the room and no such conversation took place whatsoever. So I think it would be a mistake to jump to a conclusion about one allegation, especially when it's being specifically refuted by a participant at that meeting.
Senator, I want to get back to the economy for a moment and the possibility of another stimulus package coming from Congress. I know you are not a big fan of another big stimulus bill, but if it were to happen, what would be on the table for you? We know that extra $600 in payments for unemployment is set to expire the end of July. Would you be for extending that? Would there be more stimulus checks given directly to Americans in that package?
Well, so I think the most important thing is that we get on with the reopening of the economy. I know you're sitting in Pennsylvania, and unfortunately, a very substantial portion of our state is still not fully reopened, despite the fact that we are routinely now having record low numbers of positive coronavirus tests, certainly since March. The death rate has fallen dramatically. There's not a hospital in the state that's anywhere as close to full capacity. So we really need to be reopening and allowing people to earn their livelihood and businesses to survive. And that comes from reopening. So I would be very, very reluctant to support any kind of legislation that's going to have the effect, even if unintended, of delaying the reopening that is really essential. There's another important point I want to make here. If you look at what we've already done, we have directly appropriated about $3 trillion. We've authorized the Fed, through the various lending programs we just discussed, to lend several trillion more, could easily be 3, 4 or more, but let's call it 3. Between what we've appropriated and the Fed lending, that's $6 trillion. That is 30% of the entire annual economic output of the United States of America. And most of it isn't out the door yet. So it's not.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.